Hey VV Nation, welcome to the channel. My name is Glenn, Senior Stock Market Strategist for VectorVest, and this evening's video is all about earnings. A couple of days they reported good earnings, they beat earnings. They were really pretty flat on revenue, but nonetheless they beat. Is the earnings story for Disney easy money? That's the question. Now, as I start to get started in here, a lot of people are probably going to be turned off by the whole Disney story. And I understand why. There's a lot of politics behind it. I want to bypass all of that today, and I want to get into the meat and potatoes about, is Disney a company that you could make money in? I was looking at the chat, or I was looking at comments, and people said, yeah, I had Disney and I sold it a couple of years ago. Is it time for me to buy once again? So we're going to take a look at that. With that, let's get into our first news article. So here it is. Disney beats earnings estimates, hikes guidance, which is important, which means they're not guiding lower, which is a positive sign for them, as it slashes streaming losses. See, there's a lot of streaming services out there. Disney's in the group of them. And, you know, Netflix is the leader when it comes down to that, especially by way of content. So you know that Bob Iger left Disney, now has come back to Disney after some PR stuff went down, public relations stuff, of course. I think Bob Iger was a good choice for them to get back onto their feet. But is he doing everything he needs to do? Disney beat quarterly earnings estimates and raised its guidance as it saw progress in efforts to cut costs. And that's huge. Part of trying to make money is being able to cut the fat where you need to so that you can grow. The company slashed its streaming business losses. So they were losing money. They still are, but they're losing less of it, being able to put more into their pocket. And the results come as the company faces pressure from an activist, blah, 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 blah. So let's talk about that. Here's what Disney did. Earnings was 1.2 versus 99 cents. Revenue 23.5. Versus 23.6 billion expected. As I move down a little bit, revenue again, slightly flat. And this is what I really want. Talking about the losses in the streaming, Disney Plus core subscribers shrank by 1.3 million from the prior quarter due to price increases. A lot of streaming services are going through the process of raising subscriptions and getting more from the ads, but the company saw a rise in average revenue per user because of those subscription cost hikes. So it still looks like people are coming aboard with Disney or keeping their subscriptions with Disney. A lot of us got grandkids and kids, and Disney is a go-to place for your kids to go watch TV. The company posted improvements to its streaming business the day after it announced Tuesday, and this is also big. It will launch a new sports streaming venture amongst ESPN, Fox, and Warner Brothers. I did a story on this in a live stream this week. I think that that's going to be a big move for them getting into sports. And I think that that's pretty much all that I wanted to look at from the story. So, is this easy money? Well, let's go to the VectorVest software. From the VectorVest software, we can clearly see that the stock is overvalued. A lot of stocks are overvalued in the market at this particular point in time. So whether I'm buying into a new stock or not, I'm not taking full position on it, but stock is definitely way overvalued. The stock's price by way of the news over the last couple of days has gone up. But this is what catches my attention from an easy money perspective. The company is still not fundamentally sound. The news has pushed the stock's price higher. Relative timing is higher. VST is above 1. But look at this. It's more of a volatile stock in that the stock's CI or comfort index is below the value of 1. It is currently a buy recommendation. Let's scroll over a little bit. Earnings growth, 4%, sales growth, 11%. I like it when sales growth is higher than earnings growth, and I learned that from Dr. DeLito in his little green book. They do pay a dividend. Pay a dividend of 60 cents. It's got a dividend safety of 59. Anything above 50 on the dividend side is a good thing. And not only did the stock go up, it went up on big volume. There was a lot of conviction to the move. So short term, I think that it may or may not have run its course. Long term, though, I like what Bob Iger is doing in trimming the costs being able to put more money into the company so they can go and do other things. I think long term, the company may have some upside. I'd really like to see their relative value get above 1. Relative safety tells me that the company is making money. They may be on the path to be able to do so. Last thing we're going to do, though, is look at a graph. Let's bring up a market timing graph. Now, what I've done is brought up the NPI graph, but I added a couple of things to give more insight. Of course, the stock's price gapped up after earnings. I do have trend as far as the NPI is concerned, as well as trigger. Here's the earnings per share. The earnings per share is falling, but the earnings growth is rising. That's a positive sign. Again, long term, sales growth popped up and it stayed flat. All right. So I think easy money, no. Long term, does this stock have upside? I think that as long as Bob Iger continues to do what he's doing to bring the company back to where it needs to be, because this was a powerhouse company at one time, wasn't it? It was. He's trying to bring back the grandeur of where it was. And I think on the long term, he's going to be able to do so. They need to stay out of the public relations stuff. Just as Disney, do your own thing. Run your company and you'll be fine. And I think that people can get past all of these other things that are going along with it. All right. So long term, I think Disney has some upside. Right now, the company's got to show me a little bit more than just this earnings. So is it easy money? No. And I think that the stock is going to have an opportunity to fade the gap that it had after earnings. So short term, and I think because the market is where it is right now, I think people, if the market does decide to go down, people are going to take profits on that stock that they just made on it. But long term, I think that Bob Iger has the company on the right path to cut losses, grow the company, and do what it needs to do to grow. So short term, no, not easy money. Long term, I think it's going to possibly be a good investment, but still not easy money. Tell me what you think about the video. Do you agree with me? Again, politics aside, it's all about your ability to make money in the stock market and with this stock. Do you think you can make money with this? If you like the content, hit the like button. If you're brand new to the channel, I invite you right now, take a second, hit the subscribe button, hit the bell icon so that you'll be alerted to when new videos like this come out. So thank you guys for supporting the channel. Share this content. Let other people know what we think about the stock as well. Folks, this video is over. Until the next time, see ya.
Hey, VV Nation, Glenn Tompkins here. Did you miss out on the Tampa 2-day investment seminar? Well, right now you can get access to the live recording from this event for only $195. That's right, folks, $195. You can get access to all the great presentations from instructors like Steve Chappell, Jerry D'Ambrosio, Jim Penner, Ron Wheeler, and yours truly. Folks, you just need to go to www.vectorvest.com/replay24. You need to do that right now.